Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my micro bearish scenario where we are looking for a WXY to the downside in a double zigzag. So then wave W here is a zigzag where wave C hit the most common target area for a wave C very nicely. Then we have a sideways corrective structure in a wave X, very shallow as it hit the 0.3 and rejected, taken from the high to the low of wave W, which is a minimum target for a wave X in a double zigzag scenario, for then a wave Y to the downside, which also has to be a zigzag to the downside. Couple of targets for wave Y is first of all the 0.618 to the 1.236 area. As you can see, the 0.618 has been hit. In between the 618 and the 1-to-1, we have the blue box over here, which is a main support area that I have between 25.7k and 25.9k. And we also have the channel on the chart, and the low of the channel is also a target for a wave Y in a double zigzag, which is taken from the high to the high of X to the low of wave W. Now you can see that the 1 to the 1.236 is below my blue support box. So if price goes below, the probabilities might increase for continuation. However, there is still some support in this area because we have an untouched gap over here and it is a well-known support resistance area. So even if we lose the blue box over here, it's all about looking for proof of support. On this channel, we don't catch knives, we don't YOLO, we don't FOMO, we want to see proof of support, whatever that is for you. Maybe a market structure change, maybe RSI divergences, CVD divergences, stochastic, whatever it is that you use in your plan, your strategy to look for proof of support or of course proof of resistance to then enter a position in your desired direction. Now there is a new target box on my chart after the week has ended and we started a new week, which is this one over here between 26.5k and 26.6k. So that is my main area of resistance above price at the moment. The invalidation of this scenario is if price would continue towards the downside and take out this low at 24.9k. If we go to the micro more bullish scenario, then wave X is not yet finished. So in this scenario, we still have a WXY, but wave X is extended and wave X is then becoming a flat scenario. So in this particular scenario, we then have a three-wave structure in a wave A, looking for a wave B over here on the lower time frames, and then a C. Now this wave A can also go to the left, and then you have this being an A, B, C by itself, or at least a three-wave structure to the downside, where the most common target for wave B is between the 1.236 and the 1.38, and the 1.618 over here is a more rare target for wave B, but a target nonetheless. And as you can see on the 1 hour chart, currently candles are closing right on top of the 1.618, which is still, as mentioned, a potential target for a B. And then you want to see continuation back towards the upside for a wave C. Wave C is an impulsive structure in an expanding flat in an ABC scenario. So on the lower time frames, you want to see 5-wave moves to the upside. You don't want to see 3-wave moves and then continue ranging again, right? We want to see impulsive structures to the upside, where then the target for this wave C is between the two 1.618s. One is pulled from the low to the high to then the low over here, which is a trend-based fib extension 1.618. And the second one is taken from either pivot, whatever you use for the high of A, to then the low of wave B, which gives you this area, which is between 26.6k and 27.2k. Now, a minimum requirement for a wave C, at least for an expanded flat wave C, is to take the high of wave A, and that means taking the double top. And that is what is so interesting about not only this scenario, but also if we go to the downside for wave Y to then look for a bounce, because we have a double top here, and a double top is, and as well as a double bottom, but double tops and bottoms are like a magnet for price. And it's so interesting over here that yesterday, last night, price moved to the upside impulsively, but it did not take out this high, now created a double top at 26,742 on my Coinbase chart over here. Now also you can see that the upper 1.618 is in this blue resistance box, which is between 27.1k and 27.3k. Now, if we quickly zoom in to the lower time frames over here, then a wave B has to be a three-wave structure. So let's look how, at basically the autonomy of this particular move towards the downside. And what is interesting is that it is actually quite difficult to count an impulse over here, because if we would do something like this, 1, 2, 3, 4, 5, then this wave 4 retraced to the golden pocket taken from this high to this low, which invalidates a wave 4. Also over here, this looks very 3 wavy for then another range, and then either this is a 1, 2, 3, 4, 5, but then you expect continuation to the downside because then you have a 3, then a correction and another 3. Or this by itself is a 3-wave structure to end the potential B, and you're looking for a move towards the upside. So that of course is quite interesting. If I open my confluence folder, then what you can also see is we have this support resistance area on the 4-hour, the white box. And for me it is important, if we're looking for that wave C scenario, for price to first of all not go below this low over here, because this is then the low of B. It's already far below the 1.618, so this is the invalidation for a potential wave C to the upside. But also you definitely want to see this white box over here being passed once more, candles closing over here on the upper side, to increase the probabilities for this wave C scenario instead of price continuing to the downside. So that is something that is important. It's just something I wanted to note, that on the lower time frames at the moment, price action does not look impulsive to the downside, and that means like 5 wave structures. This looks like a 3-wave structure, corrective, could be a 5-waver, but then this could still be a 3-wave structure, or as just mentioned, it's a 3-3-3, which is already finished, and we could get a little bit of a bounce. That's yet to be seen. If you look at the CVD divergences here on the lower time frames, we had some bearish CVD building. We had first of all over here lower high on price, higher high on CVD, as well as over here. Now these played out. The last one just before I started recording this video is this one over here, which was also again lower high on price, higher high on the CVD. It took this low, which is the main target, and now over here we have at least a bit of a reaction. We have to wait and see how that goes. If I go to the CVD chart, then you can see that at the moment there's no bullish CVD locally on the very low time frame here, 5 minute. We still have the bearish CVD building, so it is important for price to push through, continue to the upside and invalidate the bearish CVD, which now more locally is basically price has to continue pushing and go above this little high at 188.2k basically, and then it would invalidate this bearish CVD divergence with this little high over here. Main reason I talk about this high is because from this high to the downside, you can see we have bearish CVD1, bearish CVD2, so lower high, right? Lower high. But on the yellow line, higher high, higher high, higher high. So with this high, we had CVD divergence 1, 2, 3, and the more CVD divergences you have with the same pivot, the lower the probabilities of it playing out. So I prefer to look very, very locally at the CVD divergences on a 3 or 5 minute chart instead of zooming out and taking CVDs with this high on the left over there. However, we are still below, as mentioned, the wide support resistance area, which means the probabilities are higher to move to the downside as long as that does not change, which then leaves us actually with the probabilities over here. And I do have some additional information, because on the micro, as mentioned, as long as we are then below that wide support resistance area, probabilities are higher to continue towards the downside. Look for that blue box over here. But based on the market structure that we had to the downside so far, it looks interesting to look for a bounce for the also lower time frame scenario, where we are not yet expecting this low to be taken, but where we are looking for a continuation of the range. What is also interesting, a final thing that I actually forgot for the WXY scenario, is that for a wave X, what you actually want to see in a WXY double zigzag is you want to see wave X going over the trend line that is taken from the high to the high of B. So you want to see the trend line broken from the high to the high of the first B of the zigzag in wave W. And you can see over here that price went above the trend line, which is also nice because that's what you want to see in a double zigzag WXY. So that's just a little nugget, I suppose. So yeah, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.